third-party administrators health services regulations 2016 again. So this talks about the whole process relating to issuance of a certificate of registration, then renewal of license, then code of conduct, what is the business that they can do, then revocation of license, all that provisions relating to third-party administrators is what is contained in the TPA regulations. So we'll go ahead with the next aspect. That is your TPA.
Yes, sir. Yes, sir. Okay.
Yes. So third-party administrator is a special service intermediary who is there in the insurance sector. So I hope you are able to see the presentation.
Yes, we can see.
Yes.
Okay. So there are certain aspects. The third-party administrator is also named as an intermediary or insurance intermediary under the Section 2F of the IRDA Act. Then provisions of Insurance Act dealing with intermediaries like 42D and 42E are applicable to them. And these provisions I had discussed while I had dealt with surveyors and loss assessors. So basically, issuing of registration is what is 42D about. Then there are certain disqualifications which are specified here. The validity of registration is there and the requirement of renewal and the particulars relating to fee for renewal and the period within which these renewal applications have to be given, etc. are all provided for in this section 42D. Then the disqualifications are also provided here so that any intermediary which is there, persons who are there in the intermediary should not suffer from these disqualifications. Then section 42E provides for IRDA to specify by regulations capital, form of business and other conditions for these entities to act like intermediaries or insurance intermediaries. So exercising the powers under 114A, section 14, 26 and 42D and E, IRDA has come out with IRDA Third-Party Administrators Health Services Regulations 2016. And these regulations were amended in 2019 when the the quantum of foreign direct investment in this was increased. At that time, they modified some of those provisions. The regulations are basically talking, these are the various regulations that are there. First is about short title and commencement. Then health service agreement is an important definition that is there, network provider and third party administrator. The important provision that is there here in this regulation is section 3, which talks about what are the services that a TPA can provide. Health services by TPA is the title of that. Then applicability of these regulations, to whom does these regulation apply? Basically the TPA, and where there is no TPA, wherever we are talking about TPA, the insurer will also, it will be applicable to insurer also. Then section 5 talks about compulsory registration of a TPA to be providing health services. Then section 6 talks about minimum capital and net worth requirements. Then section 6A talked about is a modification that has been brought about insofar as foreign investment is concerned. So they have specified an undertaking to be given by the entity where the majority of the shareholding is not by residents but by foreign investors. Then section 7 talks about application for grant of certificate of registration. Then 8 talks about that also talks about the eligibilities that are there for grant of registration. Then once those eligibilities are met, granting of certificate of registration is what is section 9. Then refusal for grant of registration, in what instances can that be done and what is the procedure, that is in 10. Then the requirement of qualification training and passing examination, which is necessary for because it's a specialized business, that is contained in section 11. Then issue of duplicate registration if the original is lost, torn or mutilated, that is provided for in 12. Then transfer of shares and ownerships where there is a change beyond 5%. If someone becomes an owner of more than 5% because of either transfer or because of new issue of shares, then IRDA's prior permission is supposed to be taken. And wherever there is any change in the ownership, IRDA is supposed to be informed. Then transfer of shares or ownership is that. Then minimum business requirements. So what is it that a TPA must do minimum? That is specified in 14. It's not specified here, but it will be specified. It has been specified under a particular circular which has been issued by IRDA under this. Then renewal of certificate of registration. What is the time? What are the requirements that need to be met are dealt with in section 15. Sorry, regulation 15. Then in what events will the revocation or suspension or cancellation of license be done? Or in what instances denial of renewal will be done? That is provided for in section 16. Then if you are not interested in continuing business, you can come to IRD and voluntarily surrender your certificate of registration. That is what is section regulation 17. Then in any of these instances where you are not eligible to continue to do the business, then what you are supposed to do is what is provided for in section regulation 18, which talks about effect of and action on any of these instances that are there where your registration will not continue. Then maintenance of books and accounts, records, confidentiality, submission of reports to IRDA, all these are provided for in 19. Then section 20 is a very important regulation again because it talks about what should be the content of a health service agreement. Again, like code of conduct, it's a very elaborate regulation. So I have not tried to summarize that because every element is very important and I can't be dealing with individual elements and reproduce the whole thing. So that's why I have not dealt with this, but what should be the parameters that need to be there? They are all contained in section regulation 20. Then 21 talks about general guidelines to TPA in respect of services in relation to health insurance policies. Then servicing of foreign travel policies and non-insurance healthcare schemes. So these business, how can TPAs do is provided for in 22. Then the code of conduct for TPAs is referred to in 23. But the elaborate details of the code of conduct of TPAs is provided for in the schedule to these regulations. Then the power to inspect the TPA is given to authority, and what are the what is the obligation on the part of the TPA, etc., is provided for in section regulation 24. Then 25 talks about the general aspects. Then 26 talks about repeal and savings, and 27 talks about power of authority to issue clarifications where there are any ambiguities. So Schedule 1 talks about matters which can be specified by IRDA. In fact, after these regulations, there is a circular which was issued by IRDA, which runs into about 89 to 90 pages, where those matters which need to be elaborated in the regulations have been elaborated through issue of instructions, guidelines, or circulars. Then Schedule 2 talks about the code of conduct. Then Schedule AA is the one which I was talking about, where in case of 6A, where there is foreign investment. So that undertaking, what should be the undertaking? That is provided for in Schedule AA. So this is as far as the general scheme of the regulations is concerned. Now getting into some of the aspects of this. So basically health insurance business is defined as defined in the Insurance Act is applicable here, which we have discussed yesterday. And here also health insurance. So a TPA can do businesses relating to hospitalization, sickness benefits, etc. It can deal with travel cover. It can deal with personal accident cover. Then apart from this, there are certain other things which it can do, which is all mentioned in the regulation 3 of these regulations. Then what is the health services agreement? It is basically an agreement prescribing terms and conditions of services that may be rendered to health insurance policy holders of an insurer. And this can be entered into between whom? A TPA and an insurer, a network provider and an insurer where there is no TPA, or where there is a network provider, TPA and an insurer, all the three of them. So you could have agreements of these different types, and all these are supposed to be health service agreements. Then there is a definition about network provider. So basically any hospital enlisted to provide medical services by cashless facility to insured by insurer, TPA, or jointly by insurer and TPA. That is a network provider. So cashless treatment can be taken only in those hospitals. So what is the third party administrator? it should be a company which is registered with IRDA, and it should be engaged by an insurer for a fee or by whatever name called, and as may be mentioned in the health service agreement. And what should they be doing? They should be doing provision of health services. And what is the ambit of these health services they can provide? As provided for in regulation 3. So this is as far as the third party administrator is concerned, as defined in regulation 2M. So now here, the most important provision here is regulation 3, which talks about health services by TPA. First portion of it talks about what they can do. Second portion talks about what they should not do. And the third one says that there could be one TPA can serve more than one insurer. And the second thing, it says that one insurer can engage more than one TPA. And the choice of policyholder to select TPA, this has been, there have been some amendments that are there in relation to the choice that has been provided to the policyholder. So first, what are the things that they can do? So basically, the most important thing that they are supposed to be doing is servicing of claims under health insurance policies. So pre-authorization of cashless treatment or settlement of claims other than cashless claims, or both. So they could be doing cashless, they could be doing reimbursement, or they could be doing both. And these as per the terms and conditions of policy, because that is the document on the basis of which they should be settled. Second, within the framework of guidelines issued by insurers for settlement of the claims. So both these have to be taken into account while they are either giving pre-authorization, whether they are settling claims as cashless or through reimbursement. Then servicing of claims for hospital cover, if any, under personal accident policy and domestic travel insurance policy. So these two are the basic businesses that a TPA can do, and these two are the businesses which will be reckoned for the purpose of minimum business requirement of a TPA. In addition to it, how many insurers they can service, etc. are provided for in that circular. But any other business apart from this that a TPA can do is not reckoned for the purpose of minimum business requirements. But the other things that they can do is they can facilitate pre-insurance medical exam in underwriting of health insurance policies and even for life insurance policies. Then they can also handle health service matters of foreign travel policies and policies issued by Indian insurers for medical treatment and hospitalization outside India. So that also they can service. Second, foreign insurance companies are issuing policies to people, and those people are coming to India. And during the course of stay in India and visit to India, they are having travel, health or medical insurance, and they need to be serviced. That can also be done by a third party administrator. In addition to it, non-insurance healthcare schemes could be administered by, could be floated and administered by state government and central government. So servicing in respect of those policies can also be provided by the third party administrators. Then any other services as mentioned by IRDA. So all these are the aspects which a TPA can do in terms of rendering health services. What are the specific things that they cannot do are, one, they cannot directly make payment of claims because they are intermediaries. The second thing that they cannot do is they cannot reject or repudiate any claims directly. So here the responsibility of repudiating the claim is with the insurer only, and he only is supposed to take the decision and communicate the decision. Then handle or service claims other than hospitalization cover under the personal accident policy. So regulation, the first part of the regulation said that they can only deal with the hospitalization cover relating to personal accident and travel. So other than hospitalization, anything else that is there will not be their business. Then they are not supposed to procure or solicit insurance business directly because they are not distribution intermediaries, but they are service intermediaries. Then they should not offer any service unless it is in accordance with the terms and conditions of policy and agreement entered into. So they should be bound by whatever limits or contours are specified in the health service agreement. Then one TPA can provide health services to more than one insurer. One insurer can engage more than one TPA for providing health services to policyholders. Then insurer to provide the names of TPAs at the point of sale, at proposal or renewal stage. So This is basically intended to provide an opportunity for the policyholder to do some selection of the TPA. So here the policyholder can choose TPA where an insurer has more than one TPA for an insurance product at the point of sale. So then he will make a choice where there are more than one. Then change of this TPA can happen only at the time of renewal. During the course of the policy, if the TPA is in existence, then there is no scope for a policyholder to change. Then he can choose an alternative from those engaged where the services of TPA have been terminated. So where the TPA services have been terminated and the agreement has been, the period is over or whatever, or maybe where the TPA has been cancelled. In those instances, they will have to choose an alternate TPA, or where there is no TPA at all, they will have to go back to the insurer. But a policyholder has no right to ask insurer to directly undertake rendering health services. So where there is a TPA, he has no option. He can't tell that I don't want the TPA, you only do directly because it is your business. This he cannot tell. Then insurer has a prerogative whether to engage a TPA or not. So there were companies which were initially having TPAs but subsequently gave up TPAs. Then there were institutions which have taken were doing the business by themselves, claim handling by themselves, but subsequently engaged the TPA. So it's an option that is available. Then where they are not satisfied, an insurer can terminate the services of a TPA. Then for a particular product, they may not engage the services of a TPA. Then in relation to a particular product, they could discontinue the services also. Then change the TPA in accordance with Regulation 20. So where the policyholder did not choose TPA, insurer can allot servicing to a TPA of its choice. So at the time of issue or renewal, the policyholder will have a choice. But if it does not exercise that choice, insurer will allot the servicing to a particular TPA. Then if insurer engages only one TPA, there is no option to the policyholder. Very obvious. Then IRDA may specify guidelines for disclosure of qualitative and quantitative parameters by all insurers and TPAs with respect to health services rendered. So this is the provision which is talking about health services. I'll just pause for a moment. Any issues, feedback, comments, etc., or doubts in this provision, or till now? And one more thing, I need to charge my laptop. No doubts, no issues. Shall I go ahead?
So 1 minute, sir. One question, small.
Yes.
Is it mandatory to utilize the services of a TPA for the insurers? Can the insurer say that we'll handle the claims directly? Is it possible?
Absolutely. They can handle that. If I remember correctly, I think Bharti AXA or some company, it was initially having TPAs, but then subsequently they gave up TPAs and said that I will handle it by myself. I don't want a TPA, and that is what the regulation also says. It's the insurer's prerogative to engage a TPA for its health service management or not. Okay.
Okay, sir. Okay, thank you.
Okay, thank you. So I'll continue with the story of TPAs. Okay. So then applicability, as I told you, it is applicable for TPAs offering health services, and it is also applicable to insurers whether or not a TPA is engaged. So this is as far as the applicability. Then compulsory registration for TPAs, for health services by TPAs. So basically no person or entity can commence or carry out TPA business without valid certification of registration from IRDA. Then being a company, the main and sole object of TPA on registration is to exclusively carry on the business of providing health services. And they are supposed to, that should be their sole business. They are not supposed to engage in any other business. Then for the purpose of identification of this institution as an insurance third-party administrator, their name should have the words insurance TPA in it. And once their certificate of registration is cancelled, surrendered, or renewal stopped, they will have to drop these words from their name. Then no insurer to engage any person or entity to render health services unless it is a registered TPA. So there again the provision relating to the engaging an entity, that penalty will be applicable to the insurer in case he engages an unregistered TPA. Then this is an important provision relating to minimum capital and net worth. So basically the company should be a company with share capital registered under the Companies Act, and the minimum paid up equity share capital of a TPA should not be less than 4 crores. And the net worth as defined in Companies Act of a TPA should not be less than 1 crore at all times. So at any point of time, an insurer's net worth should be at least 1 crore. Then foreign investment in TPA to comply with the policy and rules of Government of India and any regulations, guidelines or instructions of IRDA. So it should be as per the applicable FDI norms. So from 2020, they are permitted to have 100% FDI in intermediaries. Then 6A is talking about foreign investment. So an applicant having majority shareholding of foreign investors has to furnish an undertaking as per Schedule AA, because this was brought about in 2019 when the percentage was raised to 75. Otherwise, it was only 49, and at that point of time, this Indian-owned controlled system was there. But now, when this changed to more than 49%, automatically there could be an instance where there will be majority shareholding of foreign investors. So what are the protections that need to be there is what is provided for in this undertaking. That is, the CEO, CAO should be Indians, resident Indians. Then the directors, majority of the directors should be resident Indians. Then key managerial personnel, majority of them should be resident Indians. So these are the things that are there in the undertaking, which I will discuss at the end. Then application for grant. So first, they have to make the application in such form and accompanied by such documents as specified. Then they will have to have a non-refundable processing fee to IRDA of 1 lakh along with taxes. Then IRDA may call for further information, data or clarification, and they may direct for compliance with any additional requirement also. Then once IRDA calls for information, they are duty bound to furnish. And if they don't furnish, their application for grant of certificate of registration may be refused. Their COR may be refused to them. So in their own interest, they are supposed to furnish this information. Then they have to indicate that no changes should be made in the structure, composition, etc. of the company, which has a bearing on the grant of registration without prior approval of IRDA. So now they give an application to IRDA, and in between the decision being taken, if they are going to make any other change, so then they will have to take the approval, and they will have to furnish any information that they think will have a bearing on the outcome of the application. Then IRDA has to consider the application within reasonable time, and after all the requirements are complied, and they will have to communicate the decision whether they are granting them certificate of registration or refusing it. Then what are the conditions that need to be fulfilled for grant of certificate of registration? So apart from the other relevant things that are taken into account to ensure that this entity can be a regulated entity and can do the job, certain items that are listed which need to be fulfilled by the TPA applicant for being considered eligible for grant of certification are: 1, it should have a minimum insurance TPA in its name. Then it should comply with minimum capital requirements, which is 4 crore. Then promoters should have financial strength to carry out the business. Then because it is a third-party administrator for health services, one director of the TPA must be an MBBS person with valid registration from Medical Council, and he should be entitled to practice medicine within the jurisdiction, and he should act within the jurisdiction. Then applicants or promoters or directors do not suffer from disqualifications under section 42D. Then CEO, that is Chief Executive Officer or Chief Administrative Officer. You could have either of them. And the Chief Medical Officer, they have to be fit and proper persons. Then the TPA should have the necessary infrastructure, that is space, equipment and trained manpower to effectively discharge their functions. then they should have sufficient reach with network hospitals and IT capability. Only then the purpose of engaging a third-party administrator will be useful for the insurer and the policyholder. Then in-house medical expertise plus one director with MBBS is the requirement that they need to have, because they are processing medical bills and pre-authorizations, etc. day in and day out. So they need to have medical expertise. I think our Dr. Satish is also engaged in some activity of this nature. Dr. Satish, you are with an insurer, I suppose, no? Is he there today? No. Okay. Then the promoters, then they have preparedness in adequate technologies, data security and human resources. So because they are now, the requirement that is there, they need to have electronic data. They need to be in a position to transmit information electronically. The requirements relating to technology, data security and competent people who can handle this, that should be there. Then the promoters should have professional competence and a reputation for fairness and integrity. And apart from all these things, if the IRDA specifies any other requirement, those requirements also have to be complied with. Then promoters to fulfill the criteria. What are those criteria? They must not be carrying on any business related to insurance for 3 years before the application. Then they should be persons with a positive net worth in the past 3 years before they have filed this application. Then they have net worth not less than the respective capital contribution in 2 immediate preceding years. So imagine that they have contributed 1 crore in the capital. Their net worth in the previous year should be more than 1 crore. That is, capital contribution technically could be a mere paper that is there, but the financial position of the promoters should be not in paper, but it should be in reality, that they should have the net worth more than the capital contribution that they are offering in 2 years prior to the the application year where they are filing the application on behalf of the TPA. Then any investor holding more than 10% of the paid up capital is considered to be a promoter. Then there is one provision which says that Indian investors other than promoters together not to hold more than 25% of equity share capital. So I don't know whether this is any more relevant, because you could have 100% also. So here it says that they can Indian investor other than promoters together to not hold more than 25% of the paid up capital. Then promoters agreeable to lock-in period of 3 years for funds proposed to be invested in TPA. So they shouldn't be putting it and taking it away immediately or divesting their funds, but they should be agreeable to keep it locked up for 3 years, at least for one cycle of its registration and validity of the registration. They should be in a position to put that money there. Then on being satisfied with the fulfillment of requirements under Regulation 9, IRDA will issue the certificate of registration under Section 42D. Then in addition to these conditions, IRDA can impose additional conditions at the time of grant of CUR. Then after approval of application, they have to tender a registration fee of 2 lakhs plus applicable taxes to IRDA. Then once the registration is given, within 12 months of the date of grant of CUR, they should commence their business. Otherwise, what is the fun in taking registration? But because for any other reasons, if they are not able to commence business, they should seek an extension from IRDA for a 6-month period. They will be given registration extension. But if they are still not in a position to commence, then their CUR will be cancelled by IRDA. You are not serious about doing your business, so there is no point in yourself having business, so they can cancel. Then once a certificate of registration is given, it is valid for 3 years unless it is revoked, suspended or cancelled as per the procedure laid down in the regulations. Then every TPA which has been granted TPA has to be indicating that it is a TPA by displaying the certificate of registration, be identified by the name which includes the insurance TPA in its name, then indicate its IRDA registration number, then the period of validity of the certificate of registration, then the address of its registered and corporate office, and also indicate the insurers that it is represented. So to the world at large, they need to know these details as far as the TPA is concerned. So these details have to be given by the TPA. Then in certain instances, IRDA may refuse certificate of registration. First, if the application is not complete or it is not confirming with the instruction in the application form, or it is not meeting the requirements of IRDA regulation. So then in that case, they can refuse the application. But before refusal, they may give them time to fulfill the requirements and bring it and make it complete. Then second thing, if the applicant does not comply with the requirements and conditions of registration that are provided for in section 8 and 9, they can refuse the application. In either case, they have to be given a option of being heard. Then order of refusal, if it is given, it has to be given in writing with reasons for the decision. And once the refusal is made, for 1 year period, the applicant or the promoter cannot submit a fresh application for a TPA license. Then this provision relating to 11 talks about requirement of qualification, training and passing. So a TPA can appoint a chief executive officer or a chief administrative officer. They should be persons from among their directors or senior employees, and they should be possessing requisite educational qualifications and having undergone training as stipulated by IRDA. So CEO or CAO is basically, he should be a graduate, then associate of III or equivalent examination he should have passed, and practical training with a recognized institution as specified by IRDA they should be complying with. Only then they will be eligible. Then CEO or CAO is responsible for the day-to-day administration of affairs, and they are also responsible for complying with the regulations of IRDA. The chief medical officer should be a minimum MBBS with a valid registration with medical council, and he should be a full-time employee. He should not be a part-time fellow who will be lending his name to this institution. He should be a full-time employee. Then, as usual, they should not suffer from disqualifications under 42D. And appointment of CAO and CMO and directors have to be informed to IRDA within 30 days of their appointment. Then IRDA may direct TPA to terminate the services of any of these persons, but they can do so only by giving an order in writing and indicating the reasons, and also after giving them an opportunity of being heard. Then where the certificate is destroyed, they can issue a duplicate certificate of registration. What is the processing fee? 2,000 rupees plus service tax. And IRDA, if it is satisfied that it is either lost, destroyed or mutilated, it will issue a duplicate COR. Then transfer of shares. There are two instances here. One where they have to seek prior approval. Second where they have to be kept informed. As far as where the change of shareholding is more than 5% of the paid up capital, the TPA requires prior approval of IRDA. For this purpose, they have to make an application and furnish documents seeking approval. Then TPA to file return on status of shareholding in form and time as specified. But apart from this, if there is any change in the shareholding, then only the details of changes and the current shareholding have to be given to IRDA. And where transmission of shares is by operation of law, then IRDA may apply fit and proper criteria. So maybe someone is a shareholder and automatically his legal representatives become owners of that particular share. So whether the legal representative who is supposed to be owning that substantial amount of shares, whether he is fit and proper, if IRDA wants to know, then the IRDA will ask the TPA to give information about that shareholder. Then it can also indicate to TPA to divest stake within specified period. In either case, they have to give the order in writing and they have to give an opportunity of being heard and then pass this order. And any of these things that are there, they are all appealable because any order of IRDA can be appealed before Securities Appellate Tribunal. Then this is the provision relating to minimum business requirements. So as I told you, only the first two businesses relating to cashless or hospitalization or reimbursement of claims in health insurance policies. Second thing that is eligible is the hospitalization bills under personal accident and domestic travel policies. These two are the basic items which are qualifying for minimum basic requirement. All other businesses that they do, they can do under regulation 3, they will not be treated for the purpose of minimum business requirements. So the minimum business requirements, this is the circular that has been given. So they have indicated what is the number of policies serviced, number of lives serviced is parameter 2. Then depending upon the age of the insurer, what is the percentage, etc. is also provided for. So this is the circular. So if someone does not fulfill these requirements, then the renewal can be stopped, or there could be some action that can be taken relating to renewal, which we will talk about in regulation 15, which deals with renewal. For renewal also, they have to furnish an application in the form along with documents specified by IRDA. Then when should they apply? So not before 180 days of the renewal of the validity, and not later than 30 days before the validity. So in that, it should be neither too early nor too late, but it should be between this in this 150-day period. Then along with it, they will have to pay a non-refundable renewal processing fee of 1.5 lakhs plus taxes. Then if there is any delay, before expiry, that is 30 days to expiry date if they are furnishing. If they are filing the application, then they will have to pay 100 rupees. But if it is after the expiry of it, they will have to satisfy IRDA that they have, for valid reasons, they have not submitted their renewal application. In which case IRDA will take it up, but they will have to pay a penalty of 750. So in case of non-compliance with minimum business requirements, there could be three mechanisms. One, if they have failed to meet the requirement of number of policies or lives as per this particular chart, but the extent of non-compliance is 20%, but in respect of other things they have complied with, then in that particular case, IRDA may consider the application for renewal based on the reasons furnished by TPA. But in one particular case, it is not merely 20%, but they have not complied with the requirement at all. Then in the 3 years that are there where their certificate is there, if the average of it is they are able to meet the requirement, then also considering the reasons, IRDA may permit them to permit them for renewal of the certificate of registration. But if either of these are not complied, then IRDA can refuse the renewal of the certificate of registration. Then same, they can call for additional information clarification. Then conditions of grant of certificate of registration need to be fulfilled. So if all this is satisfied, then IRDA will renew the certificate of registration, and this renewal will be for a period of 3 years. So now the next event that can happen once you have a certificate of registration requirement is that there could be an instance where the revocation, suspension or cancellation of certificate of registration has to be done, or second, the denial of renewal has to be done. So what are those events that could trigger these kinds of action? A huge list is provided for here. That is, if its functioning is detrimental to the interests of the insured, insurer or policyholder. So it is either of these three people, then also you can revoke, cancel or suspend. Then if the financial condition has deteriorated, then third thing is, if the character, constitution and ownership of the institution has changed and IRDA is not satisfied with the new structure, then in the information that they are furnishing wrong or false information, or where I am asking for certain information, they are not disclosing the information at all, then also action can be taken. Then if the institution is under liquidation or if it is adjudged insolvent, then automatically there will not be any purpose in continuance of registration. Then if they have violated or failed to comply with Act, regulations, etc., then if they have not submitted the information because of which I am not able to understand what's happening in that entity, then if I am sending people for inspection but they don't cooperate with the inspectors, then they have something to hide. So I can presume that everything is not well with that company. Then if they fail to resolve complaints and reply to IRDA satisfactorily, so their customer service, if it is poor, as reflected by their inaction, then also action can be taken. Then if they are guilty of misconduct and not complying with the code of conduct, so this is the minimum that is expected of them. If they don't do that, you can cancel their certificate of registration. Then fail to maintain minimum capital or the net worth requirement, which is supposed to be maintained on a continuous basis. The minimum capital of 4 crores and a net worth of 1 crore. If that is not maintained, then they don't have any reason to be in business. Then they fail to pay or reimburse to IRDA fees or penalties or expenses. So they should be paying the non-renewable fee. If they don't pay, then there's no reason why we should be allowing them to do the business. Then violated conditions for grant of certificate, not carried out obligations. And if the CEO, CAO or CMO does not fulfill the requirements, suppose the medical officer his license has been suspended because of some problem, or he has been the medical council has debarred him. So now he does not fulfill the requirement. So unless there is someone else, we can't allow them to continue the certificate of registration. Then if the entity is set up basically to divert or siphon funds within group companies or associates, in that case also we can cancel their certificate of registration. But you need to have a rock solid case in respect of these people. Only then you will be in a position to do that. Then if they fail to furnish additional clarification or information. So in all these instances, the certificate of registration can be revoked, suspended, cancelled, etc. So IRDA will give an opportunity of being heard before it does any of this action of suspension, cancellation or denial of renewal. But without notice, it can revoke or suspend the certificate of registration if it violates the terms of code of conduct, if it is guilty of fraud, or if the personnel are convicted of a criminal offence. Then if it commits default which requires immediate action. In these cases, you don't give them an opportunity, you don't give them a notice, but straight away you revoke or suspend the certificate of registration. And once this is suspended or you revoke the certificate of registration, you don't cancel it, but you conduct an inquiry of that TPA. And during the inquiry, you give the TPA an opportunity of being heard. And then if they are not satisfied with the reply that is given, then giving the reasons there, the cancellation of certificate of registration or denial of renewal will happen. Once this cancellation, suspension, denial or revocation is done, this will be displayed on the website of IRDA basically because general public need to be informed and the insurers need to be informed about this. So wherever this penalty is taken up, 2 years cooling period is imposed for them to take up the fresh application. So this is as far as the revocation, suspension, cancellation, etc. Then voluntary surrender, I don't want to do business, just tell that I don't want to do business for these reasons. Give an application to IRDA with documents. Then IRDA considers the issue and then it will be passing an order saying that yes, I agree for surrender. But in this case also the order is displayed on the website for information of insurers and public. And once they surrender, they should further stop the TPA business and other requirements which are there in the next regulation. So what will be the effect once the surrender is done, revocation, suspension, cancellation and denial, etc. is happening? The first thing that they should do is to stop doing their business. But when they stop doing business, there is these claims and which are there, then the processing, etc. that needs to be done, etc. So how to handle that? They have to immediately inform the insurer for taking alternative steps for servicing of affected policies. Then they will have to hand over all the books, records, etc. relating to the business that they have carried on. Then if insurer wants a return of records, etc., then they should provide all cooperation and assistance. Then if they are doing the business for healthcare, which is non-insurance healthcare of central government and state governments, so because now they cannot do the business itself, they will have to notify them. Suppose they are rendering services to foreign insurers. So they will also have to notify not only those with whom they are presently dealing with, but over the past 3 years, whomsoever they have dealt with, they have to notify them saying that now I am not in this business anymore. So the insurer not to permit the TPA whose certificate of registration is cancelled or renewal denied to render health services to policy holders in foreign countries. So not only that they cannot do business here, but they should not be doing business in respect of policy holders there also. then the natural consequence is your name should reflect your business. Now, since you are no more in business, your name, you should drop the insurance TPA from the name. This is as far as the position relating to cancellation, the effect that should be there and what is the process that should flow. Then second, because it's a corporate entity and because it is a service entity which is dealing with the claims, etc., maintenance of books of records are necessary as per the Health Services Agreement and also necessary as per the Companies Act. And the retention of it has to be as per the period specified by IRDA. And these books of accounts have to be made available to IRDA, to the insurer, and also to the investigating authority for who is appointed by IRDA for conducting inspection. Then the information that is there, they have to maintain professional confidentiality and the disclosure should be only as permitted by law. Then they need to maintain electronic systems for seamless flow of information. But where they are still holding physical files, they need to transmit the physical files to the insurer within 90 days. Then they are not supposed to share data or personal information. Then the reporting to IRDA, they should submit an annual report. And how should the annual report be? It should be duly certified by one of the directors of the TPA and the Chief Administrative Officer or the Chief Executive Officer. And it should be sent to IRDA within 90 days of close of the financial year. And whatever returns IRDA specifies relating to claims data, they are supposed to furnish it to IRDA. And in addition to it, declarations, undertakings, etc. also have to be given. Then the elaborate coverage of this health services agreement is what is there in Regulation 20. Then the other general guidelines to TPAs relating to health insurance policies is what is there in 21. That is TPAs to have necessary infrastructure to extend services. Then TPA and insurer are responsible for prompt service and proper service to policyholders. So in how do they handle and scrutinize claims? The provisions are that TPA may admit claims, authorize cashless facilities, and recommend payment as per claims guidelines to TPA, one as per the policy and as per the norms which are specified by the insurer. Then they should collect all the documents relating to claims in electronic mode for seamless processing and recommending for payment or rejection. Though they say that you should not reject the claim, the regulation says that in respect of fully or partly admissible claim, they will have to indicate the claim amount, the amount settled, and give granular details of what are the items that are allowed and disallowed, and the reasons of being disallowed. Then they will have to intimate what is the grievance redressal procedure, who is the grievance redressal officer, what is the procedure for taking it up with ombudsman, and who is the ombudsman. So this they have to give because a partly played claim is a partly disallowed claim. And the recourses of grievance or ombudsman's intervention can be given. But where the claim is totally inadmissible, then it is not the TPA who is supposed to do the informing, but it is the insurer who is supposed to inform, giving the reasons. And he is the one who is supposed to directly write to the policyholder and claimant. And again, he has to give the information about the ombudsman's recourse that is available. Then servicing of foreign travel, non-insurance healthcare schemes. So this is a permissible business that is there, and it is permissible subject to the approvals. Suppose they are dealing with foreign policies, etc. They need to have approvals from the authorities for dealing with the foreign insurers and handling the claims relating to them. Then TPA should be obtaining the terms and conditions from of the policy and also service based on a specific authorization of the foreign insurer. Then TPA should submit to foreign insurer details of health services that can be offered as a part of the agreement, and they can render health services specified by IRDA under healthcare schemes promoted, sponsored, and approved by the central or state government. So there, the TPA is supposed to submit returns pertaining to these services in the specified form. But in these cases, either the state government or central government or the foreign insurer who is engaging the TPA, it has to be made very clear that he is doing so at his own risk. Then the code of conduct is what is there in Regulation 23, and it is elaborated in Schedule 2. Then this provision is important because it gives IRDA power to inspect, and they can do it with or without prior notice. They may appoint one or more persons as inspecting authority to take up an inspection of books of accounts. And what could be the purposes of inspection? First, to see whether their books are maintained. Second, to see whether they are complying with the provisions of Act, regulations, etc. Then to inspect what is the complaints that are received from insurer, insured, other TPA or any other persons on the TPA's activity. To deal with the complaint, they can go on a inspection. Then basically on their own account also they can go to a TPA to see whether the business is carried on appropriately and the policyholders are serviced properly. So then once IRDA sends someone for inspection, the TPA is basically supposed to maintain all books of account at the head office and corporate office. So it is this place where IRDA inspectors will go, and once they go, they are supposed to maintain provide all these books and documents to IRDA. And if they don't do that, their cancellation certificate of cancellation of certificate and other proceedings can be taken up. Then all the contracts. Copies of the contract with insurers, which is the health service agreements that they have entered into, they have to be made available to the inspecting authority. Then any failure to furnish information, it could be treated as non-compliance, and the penalties could be as grave as even cancellation of certificate of registration. So wherever a TPA is opening or closing branches or changing its registered or branch offices, they are supposed to inform IRDA within 15 days. Then no representative liaison or branch office outside India can be opened without prior approval of IRDA in writing. Then for opening offices outside India, TPA should make an application and furnish information. Then all provisions of Insurance Act as applicable to intermediary shall apply to the applicant or registered TPA. So this is as far as the general provisions relating to prior intimation to IRDA and opening of offices, etc. is concerned. Then finally, repeal and savings. So the regulations of 2001 and the amendments of 2013, they have been repealed, but the licenses that were issued and renewed continue to be valid. Then the applications pending were taken up based on the regulations of 2016. Then wherever inspection was conducted and proceedings initiated, the proceedings were done under the previous regulations only, because these regulations are prospective in operation. Then the power to issue clarifications, etc. is with the chairperson. Then matters where guidelines, circulars, instructions can be given is there in Schedule 1. Schedule 2 is the code of conduct. Schedule AA is the undertaking that they had to give, where the extent of foreign shareholders is more than 50%. So first, they have to indicate that the chairman, CEO, principal officer or managing director of the insurance company is a resident of India. Then wherever they are repatriating dividend, they will have to take a permission of IRDA. Then they have to bring in latest technological, managerial and other skills. Otherwise, what's the purpose in having foreign direct investment? Then they should not make payments other than dividend to related parties taken as a whole, greater than 10% of the total expenses in a financial year. So basically, they cannot use this for siphoning of funds. So that is also something that is there. Then majority of directors of the board should be resident Indian citizens, and majority of key managerial persons should also be residents of India. So these are the provisions as far as the TPA regulations are concerned. So quite elaborate, but I have cut down on certain other aspects which are even more elaborate and very minute. So the emphasis is basically a registration, requirements of registration, then application for renewal, then what constitutes health services, then what are the components of this agreement relating to the insurer. These are the material aspects that need to be taken into account whenever any dispute relating to the health insurance claim comes into being. And where there is a dispute between the TPA and the insurer, they can take up the matter with IRDA, because one of the functions or powers that IRDA has is to adjudicate the disputes between insurers and intermediary. So this is as far as the TPA regulations and the motor third party obligation related regulations are. So any doubts, questions? Yes, sir.
So what, Venkatachalam here?
Yes, sir.
What is the regulation on remuneration to the TPAs by the insurance companies?
Remuneration. I don't think there is any specification that IRDA does in respect of that.
So it can be either a percentage of the premium procured or based on the number of policies or a fixed sum also.
It could be, and that is a part of the health service agreement which they could have, sir. It's something which they can mutually decide. So this circular that I was referring to, this does not remuneration. Does it have a director's remuneration here?
For remuneration of TPA, individual companies are deciding based on, for individual policy, it is on number of policies, and for group policies, depending on the premium, that is 4% or 5% of the premium on group policy. And if it is an individual policy, per policy, it is 75 rupees or 100 rupees. Almost all companies are paying, except some private players are paying more. Like that is going, sir.
Okay.
But there is no IRDA regulations on fee structure.
Okay.
You know, now it depends upon the company to company how much to remunerate the TPAs.
Yes.
Is there any chance that any provision that suppose the insured is not satisfied with his TPA, he wants to avail the services of a second TPA who is willing to service his claims for some other?
He can do it at the time of renewal. The provision that is there in the regulation says that he can choose a TPA at the time of policy issuance, or he can change the TPA only at the time of renewal. That is how it is.
He is not changing the TPA in the policy. He is availing the service of the policy in the of the existing TPA. But he feels that the existing TPA is not able to meet his expectations so far as claim settlement is concerned. So he goes to a second TPA and wishes to avail the services.
He cannot do so. He can change the TPA. But the fact that he is associated with a particular TPA, that relationship is created at the time of issue of the product, because you could have a TPA for a product. You could have a TPA which the policyholder chooses or the insurer allots if he does not. The option for a policyholder is at the time when the policy is issued. Second thing, if he is not satisfied with this fellow and there is someone else, there he can choose to go for the other person only at the time of renewal. During the policy tenure, he will not be in a position to change unless the TPA itself is not there, then they are allotted to somewhere else. That's a different thing. But otherwise, the change can happen only at the time of renewal.
Okay, thank you.